Assalamualaikum and very good day. We wish to our lecturer, Madam Hidayah. So as for today, my group consists of Adam Ahmad Danish, Muhammad Isha Ilham and Muhammad Muaz Afiq and me, Aufa Danish, are going to give presentation regarding our task of assignment, which is about Malaysia Financial Reporting Standard or MFRS. So in this assignment, we are required to find two listed company under Bursa Malaysia and identify how this company compliance with MFRS 116 and MFRS 140. So we already choose two company, which is Top Glove Corporation Berhad and Genting Group Berhad. So without wasting any more time, let us begin our presentation now. So for the first company is Top Glove Corporation Berhad. So for MFRS 116, for the recognitions, it states in MFRS 116, the asset satisfies the definitional requirement which include being utilized in the manufacture or provision of product or services, being anticipated to be used for more than one accounting period, and having a quantifiable cost. For Top Glove Corporation Berhad, the asset have been recognized as property, plant and equipment. The cost of asset includes any cost directly related to its acquisition, any cost related to putting it in working order for its intended use, any cost related to its removal and dismantling, and any cost related to preparing the site where it is located. For Top Glove Corporation Berhad, the costs include in determining their cost of asset assets as addition, reclassification, return off, disposal, and exchange differences. For measurement, it states under MFRS 116 that property, plant and equipment or PPE must be initially measured at cost. The cost of an item of PPE must be recognized if it is likely that the entity will receive future academic benefits from the item, and the cost of item can be accurately determined. So for Top Glove Corporation Berhad, their PPE are valued at cost, less any accumulated impairment loss and depreciation. Expenses will also include in the cost of replacing individual components of the property, plant and equipment, as well as the cost of borrowing money for lengthy construction projects. And they also state that the group will recognize the replacement part and recognize the new part with its own associated useful life and depreciation when substantial piece of PPE need to be replaced periodically. And according to Top Glove Corporation Berhad, depreciation is computed on a straight line basis over the estimated useful life of the asset, such as a piece of real estate, business property, or piece of equipment, along with any major component that was initially recognized. It is recognized upon disposition or when no further financial gain is anticipated from its use or disposal. And for presentation and disclosure, it states under MFRS 116 that the businesses must include precise disclosure in their financial statement regarding their property, plant and equipment. The disclosure assess as measurement procedure, carrying value, depreciation schedule, useful life and any revaluation. For Top Glove Corporation Berhad, it's report that all pertinent information about its PPE, including its measurement basis, which is based on cost, and its depreciation technique, which employ a straight line basis. And Top Glove also disclosed that when significant piece of property, plant and equipment need to be replaced on a regular basis, the group they recognize the replacement portion and recognize the new part with its own associated useful life and depreciation. And now we go to MFRS 140 for recognition. It states under MFRS 140, investment property must be recognized as an asset under MFRS 140 when it is likely that the entity will receive the associated future economic benefit and when the cost of the investment property can be reliably determined as opposed to being used for production of supply of goods and services for administrative purpose or for sale of the normal cost of business. So for Top Glove Corporation Berhad, they identified their property that will help them economically in the future. They were following MFRS 140. They add that an investment property lost its status when it is sold or when it is permanently taken out of service and no further financial gain is anticipated. And in the period that the item is recognized, the difference between the carrying amount and the net disposable revenue is recorded in the income statement. For measurement, it states under MFRS 140, an investment property must be measured initially at cost with transaction cost considered, and organization must reselect either the fair value model or the cost model as their accounting policy and must apply that policy to all its investment property. So for Top Glove Corporation Berhad, it states that the investment property are measured at fair value with any change recognized in income statement for period in which they arise, based on evaluation completely by registered independent value, utilizing the comparison method and investment method. And in comparison method, the fair value is determined by looking at the transaction price for comparable properties in the market, with modification made to take into consideration things like variance allocation, age, size and kind of property. Meanwhile, for investment method, This approach takes into consideration the projected net rental income from the asset, consider the occupancy rate, predicted rental growth rate, and lease incentive. To determine the present value of this net rental revenue, a risk-adjusted discount rate is used. So for presentation and disclosure, it states under MFRS 140 that company must report all information pertaining to its investment property. Whether the fair value model or the cost model is used is one of the things the corporation should report. Whether property interest held under operating lease are classified as investment property if the fair value approach is used. And Top Glove Corporation Berhad, it states that the investment property are measured at fair value with any change in recognized in income statement for the period in which they arise. Top Glove Corporation Berhad used two methods to determine the fair market value of its investment property, which the comparison method and the investment method. So in comparison method, fair value is determined by looking at transaction price for comparable property in the market, with modification made to take into consideration things like variance in locations, age, size, and kind of property. For investment method, this approach takes into consideration the project net rental income from the asset, considering the occupancy rate, predicted rental growth, and lease incentive.
MFRS 116, the Malaysian Financial Reporting Standards 116, provides guidance for recognizing, measuring, and disclosing property, plant, and equipment (PPE) in financial statements. The standard applies to all entities in Malaysia, including the Genting Group, a Malaysian conglomerate in the leisure and hospitality industry. Under MFRS 116, the Genting Group recognizes PPE as assets when certain criteria are met, such as control over the assets and the probability of future economic benefits. The cost of the assets includes the purchase price, duties, taxes, and necessary costs to prepare it for use. After recognition, PPE is measured at cost minus depreciation and impairment losses. Depreciation is recognized systematically over the asset's useful life. If there are indications of impairment, an impairment test is performed and impairment loss is recognized. Disclosure requirements include information on measurement base, depreciation methods, useful life, title restriction, and restriction on using PPE as collateral. It is important to consult accounting professionals or refer to the latest accounting standards for accurate information, as the application of MFRS 116 can vary based on specific circumstances. Next, the Genting Group is a diverse enterprise involved in hotel, leisure, gaming, and entertainment industries. They own significant real estate and assets. The implementation of accounting standard MFRS 116 has influenced their measuring practice, leading them to establish strict procedures for compliance. According to MFRS 116, the group classifies property, plant, and equipment as asset based on certain requirements, including future economic advantages and accurate cost measurement. They must accurately estimate the initial cost of purchased assets through effective documentation and appraisal. The cost of this asset is distributed over their useful lifetime using a systematic depreciation approach. The estimated useful life and residual value of assets must be regularly reviewed. Adhering to MFRS 116 enables the group to record depreciation costs accurately and enhance the comparability and dependability of their financial statements. The standard also obligates the group to assess assets for impairment, ensuring potential losses and recognize appropriately. MFRS 116 has significantly impacted the group's measuring procedures, improving financial transparency and empowering stakeholders. Compliance allows for consistent assessment of the group's property, plant, and equipment, enabling useful comparison and accurate financial statement. The Genting Group must continue to adopt accounting standards like MFRS 116 to maintain its responsible corporate image in a dynamic market. Last but not least, the presentation and disclosure of MFRS 116 by this company impose the importance of openness and accuracy in financial reporting for investors. It mentions the Genting Group, a company operating in various industries such as integrated resorts, casinos, hotels, entertainment, and plantations, relies heavily on property, plant, and equipment for its operation and expansion. The Malaysian Financial Reporting Standard MFRS 116 provides guidelines for the presentation and disclosure of PPE for organizations like Genting Group. Adhering to MFRS 116 ensures that Genting Group provides comprehensive information about its PPE, including the net book value, cumulative depreciation, carrying amount, depreciation techniques useful life, and evaluation of impairment. This information helps stakeholders such as investors, lenders, and regulators make informed decisions regarding financing, investing, and monitoring. By complying with MFRS 116, Genting Group aims to maintain transparency and accuracy in reporting its PPE.
In terms of recognition, Genting Group, as a company operating in Malaysia, will be required to apply MFRS 140, the Malaysian Financial Reporting Standard for investment properties, in terms of recognizing its investment properties in financial statements. Based on our preview on Genting Group financial report, the recognition of investment properties involves identifying and classifying properties that meet certain criteria. These criteria include legal ownership, or the right to lease the property, generating rental income, or having the potential for future rental income, and meeting specific requirements if the property is under construction or development for future use as an investment property. So in terms of measurement, Genting Group, as a key participant in leisure and hospitality business, manages several investment assets abroad, including hotel, resort, and entertainment complexes. As a result, Genting Group's measuring practice. Genting Group now has a clear and consistent process for determining the fair value of these investment assets thanks to MFRS 140. This assures financial reporting openness, accuracy, and comparability. Firstly, MFRS 140 manages the initial accounting of investment assets at cost, including transaction expenses. Genting Group scrupulously follows this strategy, documenting all relevant expenditures paid during the acquisition or building of the investment assets. By doing so, Genting Group guarantees that the first measurement of its investment properties is carried out in a consistent and dependable way. Next, in terms of presentation disclosure, in terms of presentation of investment properties under MFRS 140, it is such as those like Genting Group are required to present investment properties as a separate line item on the balance sheet. This presentation distinguishes these investment properties from other asset categories, allowing stakeholders to understand the specific value and nature of this asset. Investment properties are typically classified as a non-current asset, separate from property, plant, and equipment, or other fixed asset. This dedicated presentation enables readers of the financial statements of Genting Group to evaluate the contribution of its investment properties to the Genting Group's overall assets base and assess their potential impact on future performance. Next, in terms of disclosure requirements for investment properties, MFRS 140 includes specific disclosure requirements that Genting Group must fulfill to provide relevant information about their investment properties. These disclosures assist stakeholders of Genting Group in gaining a comprehensive understanding of the measurement, accounting policies, and significant aspects related to investment properties. Disclosure may include information on the measurement basis, use, fair value on cost, significant accounting policies adopted, rental income received or receivable, significant judgment or estimate made, and any restrictions on the realization of investment properties. Additional disclosures such as details about the locations, type, use, lease terms, and commitments or contingent liabilities related to investment properties may be necessary if they are deemed significant.
Let's start with MFRS 116, which is applied to property, plant, and equipment. Based on disclosure requirement, MFRS need such as carrying amount, depreciation method, and significant accounting policies for entities, property, plant, and equipment. MPERS does not require a lot, as it is simple requirement rather than MFRS 116 because it is mainly for a small and medium-sized entity. Secondly, is based on apparent entities. MFRS 116 is mainly used for entities reported under the Malaysian Financial Reporting Standard framework, which is included company that publicity, traded, and any other entities required to prepare MFRS financial statement. MPERS, on the other hand, was mainly development for private entities which is lack public accountability and prefer to use the Emperor's favorite rather than field MFRS, as MFRS has a lot of requirement. Next is based on scope. MFRS 11C is mainly for PPE, property, plant and machinery, which is included tangible asset. MPERS is an accounting standard for that is usually used for private entity because of its simplicity. Next is MFRS, which is applied to investment property. Based on measurement, MFRS 140 is used fair value or cost model, but for MPERS, if the fair value can be measured consistently without undue cost or effort, the investment property must be measured using the fair value model. Next is presentation and disclosure. MFRS 140 must separate presentation in the statement of financial position. For MPERS, not required, but fair value of investment property measured using the cost model must be disclosed. Lastly is evaluation method. For MFRS 140, investment property must be immediately measured at fair value under MFRS 140, which may require the use of valuation technique. Although MPERS encourage the use of cost-based measurement, this does not provide implicit guideline on the initial measuring of investment property. That's all from me. Thank you.